Global share markets fell dramatically in March, mainly in response to the coronavirus outbreak. We saw rapid infections sweeping across Asia, Europe, and the United States in particular. Global share markets became very concerned about the risk of a global recession and a very sharp fall in corporate profits and employment. Because of that, the global share market fell around 13%, measured by the Morgan Stanley Capital Index. The American share market fell around 12%, but our share market significantly underperformed. Our share market fell in Australia by more than 20%. With the virus spreading, there is concerns that the American economy has moved into a recession. And with that, we have an environment where investors become very, very cautious and try to reduce their risk appetite. In the space of 16 trading days in March itself, the American share market fell 24%. You could draw parallels to what happened in the October 1987 share market crash, as well as the 2008 global financial crisis. So the coronavirus has had a very dramatic impact on the American share market. Australia's share market was particularly sensitive to the coronavirus outbreak. Because we are a key commodity exporter, in fact, we're the world's largest exporter of liquid natural gas and coal. And with the falling oil prices, what we've seen is downward pressure on liquid natural gas and coal prices. And because of that, it's had a negative effect on global investors' perception of the Australian share market. So Australian shares fell about 20%. We've also had concerns as well with real estate investment trusts. These trusts, because of their sensitivity to employment, their sensitivity to retail sales, with the government's recommendation for stay at home, what we're seeing in this environment is concerns about the downside risks with these real estate investment trusts. So they fell about 34% during March. There are two important signs that we may be nearer a recovery. The first sign is that if we look at the pace of new infections in Western Europe in particular, so if we look at Italy, Spain and France, where the coronavirus impact was particularly severe, what we're now starting to see is the number of new cases starting to peak. So that's a promising sign. The other promising sign for a share market recovery is that central banks and governments have responded by providing more stimulus. So in the case of central banks, what we have seen, both the American and Australian central banks have cut interest rates during March. We've also seen governments pledge budget stimulus measures. So in the case of both Australia and America, if we calculate the stimulus packages, they're worth approximately 10% of the nation's GDP. So these measures will help stabilise economies over coming months and should help both the Australian and American share market. With these dramatic events, it's natural that investors feel the need to move out of growth assets such as shares and property and move more towards safe havens as cash. But we need to be very careful that by moving to a more defensive position in your investment portfolio, you will probably miss out on the opportunity for a recovery. So as long as you stay diversified and stay focused on your long-term investment strategy, you should be able to ride out the current market turbulence with the coronavirus.